The broadcast is now starting. All attendees are in listen-only mode.
Welcome, members and guests. This is Joanne Obata with the International Model Investment Club. We are a Better Investing Model Club open to the public. All our meetings and stock studies are held online, allowing us to have members from around the world. Our current members are from the United States, Canada, China, and Singapore. Guests as observers, you will be muted during the meeting and will have an opportunity for questions and comments once the meeting ends. Any companies mentioned today are for educational purposes only and are not intended to be a recommendation for buying or selling any stocks. We ask that you conduct your own review and analysis of any company of interest before making an investment decision. This meeting may mention products or services not endorsed by Better Investing or the club. The views expressed are those of members and do not necessarily represent those of Better Investing. This meeting is being recorded and will be posted to our YouTube channel for future use. Some background on our club. We were founded in May 2016. Again, we're a Better Investing Model Club open to the public. Our monthly meetings are held on the third Monday of each month. In December, we meet on the second Monday of the month. We use hypothetical money, meaning we don't contribute money, actual money, so it avoids issues with currency exchanges and taxes since we're international. Our primary role is to be a learning lab and to learn better investing principles and the fundamentals of stock investment using the online stock selection guide and to learn investment club operations management. Again, all meetings are held online, so we serve visitors and guests from around the world, and we have an international community. Actually, we currently have 13 members from the United States, Canada, China, and Singapore. So for our guests, the agenda is available in the handout section of the control panel to the right. All visitors and guests will be muted during the meeting, and you may post questions in the question section on the right as well. At the end of the stock presentations, visitors and guests will be unmuted and asked for their comments and questions. This is our disclaimer that I briefly went over in the beginning of the introduction. And now we will go to, let's see, I'll quickly go to ready. Are you ready? Or actually, let's go to the agenda. Can I get out of here? Let's go. So this is our agenda for the evening. We will be going over the Treasurer's report. We will be having an education topic from Piero on technical analysis. And then we will do 2 annual reports, Amazon and Facebook. And then we will open the mic for guests, questions and comments. And then that will be followed by a club business. So ready? Are you ready to give the Treasurer's report? Ready? Are you on?
Is he muted? Oh, he's muted.
Oh.
Ready, you are muted.
Oh, okay. Wait a second. I think I muted him. Okay. Sorry, Reddy. Okay.
Ready.
Go ahead, Reddy. Do we need to make him a presenter? Okay. I made you presenter, Reddy.
Okay. Okay. This is February 21st today, the Treasury report. Applicable to as of yesterday. This I can deposit it the day before or up to the day of deposit. I cannot post date it, so I deposited yesterday. 13 members, $1,300. We didn't buy any stocks last month, and we sold Franco Nevada and FLT, and these are the proceedings from these 2 sales. No member withdrawal, and also we paid out Haney Michael's contribution or valuation as of last month right after the meeting. I generally pay after the meeting. And as of now, with the last night's deposit, we have cash balance of $33,064. The heat map looks something like this. Our largest holdings are Vertex, Schwab, IIPR, and Disney. And IRBT is small. Next is our portfolio gains. You can see that iRobot is largest loss, but I think we have small contribution. Hopefully it will come back. Somehow the stock is not moving for some reason. Amazon, we just recently bought it. What else? LGI Homes, I think we can review sometime based after somebody's stock presentation. This is the comparison of our gains with compared to benchmark gains. You can see Vanguard Total Stock Index and Market Index Fund. You can see that this year we are doing, everybody's doing terrible, and but previous years we were okay. Here it shows that I took the valuation date is used as 2/16. That's I think the working day last Friday. Our diversification is shown here. We have little, I think, larger than what we may have to have on the mid. I suggest some of the mid to move to large caps so that large caps looks reasonable. The diverse sector diversification, again, largest sector we have is communication and financial services and healthcare. We have a small one in technology, but generally people have more technology than the small percentage. My last slide is industry diversification. These are all different industries. You can see we have largest one in biotech and capital markets. And maybe we can increase some of these retail, construction, and furnishings in the future. I think that's my last slide. Any questions?
It is interesting to know that technology is so small. I know
Yeah.
we sold FreeCore. What else did we sell? We used to have 3 companies, I think. I don't remember. I know we sold the FreeCore was in technology. But honestly, internet, Google, all these, Amazon, Google, you could consider them still involved with technology, even though they are not in the technology sector.
Yeah, Amazon is, I agree, Amazon is technology, but I think what else
Google.
is technology here? Not much in technology here. Generally, people tend to have a high percentage in technology.
Yeah.
Okay.
I think we just need to get your recommendations when we go to sell and buy.
Yes. By the way, when I have a microphone, the technamental is used by Doug Gerlach all the time in the stock central. If you do the analysis, take stock analysis, this is called technamental. I think that's a word used by BI.
Okay.
What is it?
Maybe we'll get to the Amazon and the Facebook when we do our annual reports. We can discuss.
No, I'm just mentioning that the technamental word is used by BI people when they do the stock analysis.
Okay. Thank you, Reddy.
Okay.
Are you ready, Piero, to do your presentation?
Sure, for technical analysis, yeah.
Yeah, I'm going to make myself the presenter to show your screen. Okay, go ahead.
Okay, so we're at the beginning there. Just a little talk about technical analysis. We, as a club, we're fundamental analysts, right? We look at the fundamentals of a company. What does a company build? How does its management perform? Is it profitable? Is it making money? Is it losing money? What are the prospects in the future? What are its future products coming out? Any innovation, something of that nature. Technical analysis. In the technical analysis, most of these people are just really interested in the price of a stock. They don't really care what the company makes. They don't care what the management, how good they are or how bad they are. They're just looking at the price, and they want to kind of ride the rising wave of price and then get off before the wave crashes. And so this is how they make money. But anyway, with technical analysis, as Reddy was just saying, the technical analysis price, but at Better Investing, we graph sales, earnings, pre-tax profit, we graph return on equity, we graph everything else but price. Well, we graph price as well, but not so such a high emphasis on. So we're kind of, borrowing a leaf from technical analysis. We're graphing everything else except price. Okay, so we can move on with our second slide, I suppose. Okay. And
It's the agenda.
okay, yeah. There are a bunch of things. Well, for technical analysis, in technical analysis, what they really do, they look at the opening price of a stock, the daily high price of the stock, the daily low price of the stock, the closing price of the stock, and the volume. So there are a limited number of things that they look at. And you can make so many indicators from this limited number here that people have written books about it. But we're only interested, as fundamental investors, we're only going to look at a couple of 3 or 4 technical indicators for a specific reason. Okay, so I guess number 3 is, yeah, this is what they're interested in: open price, high price, closed price, volume. Right. And then one of the better technical analysis websites is Stock Charts. It's a paid for service, right? So, but for us, technical fundamental analysts, we're going to use Yahoo Finance. They have a charting ability, so we can just graph a couple of indicators on Yahoo Finance. Okay, another a good technical analysis website is what's it called? Big Charts. Okay, and then for Big Charts, and then we're going to use Yahoo Finance, and you can see there on this slide 6. If you look at it closely on the left, kind of midway through the slide on the left, it says indicators with a little cross and a circle beside it. And then right along that line on far to the right, there's a line. And you can graph the price either with a straight line, a solid line, or you can graph it with bars, or you can graph it with candlesticks, what they call candlesticks. So on item 7, this is a graph of the candlestick chart, and it's colored. Green usually.
Oh, sorry. I have trouble with the advancing. Okay, sorry.
Yeah, okay, channels on
Colored bar.
channel 7, presentation 7 or card 7. The green bars usually indicate the price has gone up. The red bars usually indicate the price has gone down. And this kind of bar pattern gives us a bunch of clues as to what's going on in the price. And I think, let me see, the next chart will explain it a little bit better. No, actually, yeah, go to the next chart, number 8. This is a candlestick chart, number 8. And all right, and then go to the next placard, or number 9, and this will describe the differences between the bar chart, different similarities between the bar chart and the candlestick chart. In the bar chart on the left, there's that little tick on the lower left of that bar. This is the entry point. This is where the price opened in the day, and it kind of goes down to the bottom of the tail, and it goes all the way up to the top of the head. That's the high, and then it ends the day at the close. Okay, so that's easy to kind of understand. It kind of gives you the volatility of the price movement. It started fairly low, it ended fairly high. That means, it usually means, you know, there are buyers and sellers in the stock market, and buyers and sellers are constantly negotiating between each other, kind of constantly pushing to find a good price. Some people, you know, in order to buy or sell anything, one guy has to think the price is too high and I should sell it, and the other guy thinks, no, the price is low and I want to buy it. So you have to kind of match up, and so they're arguing over the price, the appropriate price for the stock. And they start at very low and they end up very high. So the stature of that stock has gone up. That's in the bar chart. Now on the candlestick chart over on the right, usually in a candlestick chart, it's almost exactly the same information. In a candlestick chart, if the body of the candle is not colored or is a very light color, that means the price ended up higher during the day. So that means it opened at the bottom left of the body and ended at the end of the day at the top right of the body. And then the little head above and the little tail below, that tells you the breadth of the price movement. But the kind of the body of the candle tells you, you know, the territory over which, the price range, the territory over which they argued, right? And that came out at the end. Okay, so that's candlestick charts. On to the next chart. One of the better things about technical analysis is moving averages. The 200-day moving average is kind of the whole hum everyday price level that a stock will move at. You know, nothing much is happening, no good news, no bad news. It's just moving along, doing its thing. Usually, generally about the 200-day moving average. The 50-day moving average, that's a shorter moving average. It's more immediate. It tells you what the investors are doing relatively now. And then there's a 20-day moving average, which is even more short. It reacts much more quickly to the movements in this price chart. Okay. Then on moving averages, there are the simple moving average and then there's an exponential moving average. But for our purposes, they're almost exactly the same. So we go for the simple moving average, makes things a lot easier. Next chart on next chart on 11, card 11. This is the moving averages. This here, what they're doing is they're plotting a 50-day moving average against a 10-day moving average. Now, if you're going to be a technical trader, a technical analysis, and you're a day trader, they're going to be using time periods much shorter than 50 days, much shorter than 10 days. They'll be using maybe a week, 3 days, something like that, because they want to move in and out of a stock quickly as the price fluctuates. But if we want to have a more kind of strategic view of things, you take a longer term moving average. So now, when a short-term moving average crosses a longer-term moving average on the upside, meaning from below to above, as happens in the first circle on the left, this is called the golden cross. It means a short-term moving average is telling you that people right now are buying, and so it's pushing the stock price up, and it'll reach the top. And see the bar on these candlestick charts here, the dark color means it ended the day lower. The light color means it ended the day higher. And so as this price graph reaches a peak here, kind of in the center of the graph, there are a lot more sellers, a lot more people putting downward pressure on that price. And eventually, what happens on the next circle on the right, the 10-day moving average crosses the 50-day moving average on the downside, and that's usually called a death cross. Means the price is going down. So don't hold that stock, right? On the first circle, you buy on the left. And then when it starts hitting the circle on the right, that's when you got to sell. Just like a day trader. Okay. On the next chart, there's a moving average convergence, right? A MACD. This is a one of the favorite indicators for technical analysts. And what they're doing is they're kind of what's it called? They're plotting. The technical part of it is that they're plotting the a 12-day moving average minus a 26-day moving average on the same day, and then they plot a signal line of a 9-day moving average. They're putting different moving averages because, you know, short-term, long-term, when they cross, it gives you a signal to do something, to sell. On the next chart, on the next page or placard, you have the MACD graph with a histogram. Histogram is really the square rectangles that are associated with a MACD. So the signal line is the orange line, where the MACD line is the black line. The MAC line is 26 days, 12 days. So it's a longer moving average. And the shorter moving average is the 9-day signal line. Now, you know, when the longer term moving average crosses this slower moving average, 9 days, this is interpreted as a buying opportunity. And when the reverse happens, when that longer term moving average falls below the signal line, it's a sell. Okay, so there's that. The next one, next placard would be, okay, buy sell signals. Yeah. So when the MACD line, the darker on the bottom, the MACD line crosses the signal line, the orange line, on the upward side, that's you buy there because the price is going up, and that first circle on the bottom. Then that circle on the right is when that MACD line crosses the signal line on the downside, the price is going down, so you sell. And there are other lines in the background here that there are moving averages, and then there are bar charts, and they're kind of all integrated, you know, which I'll talk about a little bit later on. Okay, so the next chart is a relative strength index. Relative strength index is an index that's usually between 100 and 0. And what happens is line fluctuates between 100 and 0. And when that line, this relative strength index line, gets anywhere near 70, this indicates kind of an overbought situation where people have just pushed the price up. It's gotten very high. And then when that line gets down to around the 30 mark, this is an oversold, where people have sold so much and driven the price down. So that's another indicator. And we're going to talk about a couple of more indicators, which will be kind of important because in technical analysis, if you rely on one indicator, it's risky. So they always tell you that, when one indicator tells you something, you got to get confirmation. You got to go to another unrelated indicator that tells you the same thing that the first indicator said. And that gives more credence to what the price movement will probably be. And then the next graph or next chart, there's an example here in that in this chart here, we see there's the relative strength index at the top, all right? And then there's the price candlestick pattern in this, a little bit below that. There's simple moving averages be almost at the same level as the price chart. Then there's the volume indicator below that. And then there's the MACD that we just talked about. And then at the bottom of that is the Chafin money flow index. So these are different indicators, and very often they will tell you the same thing, but not always. All right. So for example, in the rectangle to the left, the relative strength index tells us that the stock is oversold. And the price line, candlestick price line, seems to be going down. So that's kind of confirmation there. The volume indicator, the rectangles, the black and the red rectangles below that, there seem to be more sellers. The red bars are means there are more sellers. The blue bars or the black bars means there are more buyers. There seem to be more sellers. So the price is going to be driven down. The MACD histogram below that tells us that the MACD line is below the signal line, which tells us the money is going down, the price is going down. And at the bottom of that first rectangle is the Chapin money flow index. And the flat area, that's the zero line. When the Chapin money flow index goes below that zero line, means there's more sellers. When it's above that zero line, it means there are more buyers, and the price will go up. So anyway, in that first rectangle, all the three indicators seem to say the same thing. But in the second rectangle on the right, there will be a little difference. The relative strength index tells us that its price is being driven up. So it should be a high price. And the candlestick chart pattern tells it that it is indeed moving up. But if you look closely behind the candlestick, there's that red line, which is a 200-day moving average. And there's a slightly kind of a blue line, which is a 50-day moving average. Okay. Now, the 200-day moving average is above the 50-day moving average. Right? And that tells us that there should be no action. There should be nothing. Nothing is being pushed up. Okay. Below that, then you can look at the volume bars at the bottom below that, and there are a number of buyers, more buyers than there are sellers. There are more black dark bars than there are red bars. So that tells us that the buyers should be pushing the price up. Below that, the histogram, the MACD histogram tells us that the MACD line is above the signal line, indicating that the price is going up. And at the bottom of that, the Chafin money flow tells us at least the right half of it that money is flowing into buying. So the price should be driven up. So all indicators are saying it except the 200-day moving average and the 50-day moving average. They don't seem to agree. And that often happens in technical analysis. So whenever one indicator says something, you got to get confirmation in another unrelated one. And then over to the right, all the indicators seem to be saying the same thing, right? The price is going up. The relative strength index is up above 70%. It's being overbought. The candlestick charts are going way up. The 50-day moving average crosses a 200-day moving average on the lines there below that, saying the price is going up. On the volume indicator, there are more dark rectangles than there are red. Again, more buyers than there are sellers. And below that, the histogram tells us that the MACD line is above the signal line. So again, the price is going up. And the Chafin money flow index tells us that there are more money going into buying, which is above the zero line, right? So all the three indicators on the right tell the same story. In the center, they don't. On the left, they do. So get confirmation. Okay, the next topic here, Bollinger Bands, Chaikin money flow chart patterns. We'll talk a little bit about that. Okay, now Bollinger Bands, see on this graph, the Bollinger Bands are, well, in the center, we have the bar money price graph, bar graph that tells us the price. And the Bollinger Bands are one standard deviation above the general price line and one standard deviation below the general price line. When the price gets up close to the top of the first standard deviation above, that's going to be around, you know, the relative strength index. It's going to be close above 70. And then when the price gets down to the lower limit of the Bollinger Band, one standard deviation below the general price, it's going to be around about on relative strength index of about 30. So that's what the Bollinger Bands are. It's kind of a standard deviation above and below, one above and one below the price. And when the price varies, gets close to either the border above or the border below, it tells us the buy or to sell. Okay. Next is this one here, the Chaikin money flow. We just talked about that. The green above the zero line says that many more buyers than there are sellers. When it goes below the zero line, there are more sellers than there are buyers. So that's just kind of telling you how the money is moving in the markets. The next graph here, yeah, on three principle. Okay, this is what I was saying at the beginning. Everything that is about a company is known, is reflected in its market price, right? Prices move in accordance with the laws of supply and demand. And market action from price patterns is repeated. This kind of gives you kind of an indication of what the investors are thinking, kind of almost give you their kind of emotional state. And then we can go on to patterns. Now this is a double top pattern. And so the technical analysts will look at this and they will say, oh, this pattern where starting from the left, they're pushing the price way up and they're trying to establish a support level. And but if the stock is not supported, it'll begin to go down. So they think that when you have this kind of pattern, a double top, it's a kind of a trend reversal pattern, and the price will almost inevitably go down, they think. But you know, in technical analysis or anything else, nothing is guaranteed. Okay, and then look at on this presentation on chart 21 or card 21. Look at the volumes at the bottom. There are huge sells, and that's just at the point where the price starts going down. There are simply so many more sellers than there are buyers, so the price drops. Okay, the next card, 22, this is a double bottom. This again is a trend reversal pattern, which indicates that, you know, stock is going up, they think. And again, you kind of coordinate it with what's going on in the volume and the second indicator. Okay, and then there is, let me see, the next card is a head and shoulders pattern. Well, you know, in technical analysis, two people doing technical analysis can look at the same chart and see different things. It's a bit of an art, whereas fundamental analysis, numbers, it's hard to, you know, misconstrue numbers. We look at, you know, the numbers, But we graph fundamentals because it's easier to see, gradually increasing percentages rather than, progressing from 3%, 3.1%, 3.4%, 3.3%. So that's why we do graphing. But anyway, technical analysis, they see head and shoulders. Head and shoulders is, again, it's a trend reversal pattern, and the price is going down, especially if the neckline points down. And the neckline doesn't always point down. It could be level, parallel, it could point up, but if it points down and you have a head and shoulders pattern, the price is going down. Next graph would be on the next card, number 24, would be the head and shoulders bottom, where again, head and shoulders, right? Head at the bottom, the left shoulder, the right shoulder. And, you look at the pattern, you think, okay, price is going up because it's a trend reversal thing, a pattern. And especially if the neckline points up. If the neckline points up, then yeah, the price will go up, or so they think. And okay, now the reason oh, this is the cup with handle. This is another pattern. This where there's a this is a card 25, a cup with handle. This is kind of a base building pattern where many more buyers are coming in and sellers, and they're arguing over it, and they finally reach kind of a resolution, and there's a breakout on the far right. So this is a kind of another pattern. Now, to put it all together as a fundamentalist, we use fundamentals to tell you what is a good company. Do they have a good product to sell? Do they have plans for upgrading this product? You find a company that earns money, profitable, has good profit margins, good management. Fundamental analysis tells you what is a good company. Technical analysis will tell you when to jump into and buy, when it's a good time to buy, when it's a good time to sell. So for technical analysis, few indicators that tell you if the price is too high or the price is driven too low, relative strength index, and moving average, right? 200, a price that's below the 50-day moving average is likely to be in the buy zone of an SSG. And when a short-term moving average crosses a long-term moving average on the upside, means the price is going up. So if you want to buy something and you see this pattern of the relative strength index is at 75 or 80, and the short-term moving average is crossing the long-term moving average, the price is going up. Don't buy at that time. Just hold on, and the opportunity to buy at a low price will come. But your fundamentals tell you that it's a good company. Technical analysis will tell you when to get in and when to get out. And that's about that. And that's why we use it, just to get in and to get out. The other things that technical analysis, we don't really bother too much with. So is there any questions?
Is anybody monitoring the question box?
This is a very good presentation, Peter. You have any reference material that I can read?
Yeah, you go to stock charts. It's a paid for service if you want to use their technical indicators, right? But they have a chart school. You just go there, read up, what these patterns mean, all this kind of stuff, and they have a whole bunch of examples and all that kind of stuff. That's a good site for that. Just don't sign up for any of their classes or anything. Then you can also go to FinViz. FinViz kind of marries kind of fundamentals and technicals, and you could just kind of look at it and kind of piece it together. Then there's big charts.
Yeah, any write-ups like an article, a book,
yeah.
or
Saul Seinberg. Saul Seinberg. He's he's a better investing member. He wrote a couple of pamphlets about it that are good. There's also another one by Dr. Shucks, I wrote it down somewhere here. Yeah.
I attended a couple of days by Ralph Acampora,
Yeah.
and he was pitching high, and he has a degree in charting. Technical, I'm from engineering background, so it's very hard for me to buy into technical analysis, but interested in reading it.
Yeah.
Because it's more art than science there.
That's right. It's more art. So you have to seeing these patterns is a bit of an art. All right. So
yeah, whenever you see chart pattern, they come up with an explanation.
Yeah.
After the fact, but I would like to read some reading material on this.
Yeah. Yeah. See if you can get Saul Seinberg. Saul
Steinberg. Okay, I'll look into.
Yeah.
We saved his PowerPoint in our education topic folder.
Yeah, there's one in there, and then he has a couple of more out there as well.
I thought I saved the both. I could be wrong.
Yeah, if you add some couple of references at your end slide, in your end slide, that will be nice.
Yeah. Okay. There's also another one. I can give it to you when I find them. Let you know what they are. Okay, actually, I am gonna take a look at my on my computer, see if I can pull it up.
Okay. Meanwhile, Piero, we're going to get going with the annual reports.
Okay.
Is that okay? Well, Megumi, are you ready to do your Facebook? And then we'll come back to Piero once he's done looking at the information.
Sure.
Okay.
It would be good if Pearl can show us by using Facebook as an example. If we find Facebook to have good example,
Okay.
I think it would be great. Yeah, that would be wonderful.
Megumi, are you?
Yeah.
Do you want to be presenter? Oh.
You can. I think usually you do, and then I can just talk, unless you want me to.
Oh no, I can. Whatever you want. You let me know.
Yeah, you can go ahead.
Okay.
My screen's kind of a mess. Let's see.
Under annual stock.
Yeah. You want to? I thought we were gonna bring up the SSG. Sorry.
Oh, SSG. Okay, sorry.
Yeah.
Let's see. Oh wait. I don't have your. Hold on a second. Okay. All right. Let's see. Where are we?
So you can show my screen. I have the SSD.
Oh, you do?
Up.
Okay. Can we do that? Because I didn't download the. I'm gonna make you the.
I have everything up, so
Thank
I
you.
think my SSG is similar to Megumi, so she can just use mine.
Okay. Okay. You're the.
Okay. I think Megumi can go ahead.
Yeah, so I'll just start by summarizing some notes from the earnings call. So this is Q4, the annual 2021 annual, but in Q3, the previous quarter, Facebook shared their vision of the Metaverse, right? And also started reporting their financial results in two segments. First was the family of apps, which includes Facebook, Instagram, Messenger, WhatsApp, and then Reality Labs, which includes augmented and virtual reality related consumer hardware, software, and content. So I'm sure you all heard or read the sharp decline in their share price drop, like 25-26% when they, and the reason why it dropped is that they announced weaker than expected revenue growth, but that's for next quarter, for 2022 Q1, not this quarter. So the revenue growth for next quarter was anticipated by analysts to be 30.15 billion, but Facebook came out and said that they anticipate 27 to 29 billion. But this quarter, they still beat their projections. It was 33.67 billion versus the 33.4 billion. Although they did miss earnings, Q4 was $3.67 versus $3.84, which was expected. And Facebook attributed that to several things. First, the global supply chain disruptions. You know, people shopped early. There were labor shortages, inflationary pressures. There were some currency headwinds. And also Q4 was the first holiday season after Apple's iOS changes. So, so what that means, how does that affect Facebook? When Apple changed its iOS, so it means that accuracy of Facebook's ad targeting decreased, which increases the cost of driving outcomes. And measuring the outcomes became more difficult. And they anticipate that this is going to continue into 2022. And then also there was, the lapping a period of strong demand in 2020 that benefited from the strong growth in online commerce, which has since slowed because we're coming out of the pandemic. So going forward, Facebook, or should I say Meta, their strategy is what they say, short-term trade-off for long-term gains. So, and they say they have a playbook for this. They've done this type of move before. For example, when they went from mobile feed to stories and from web to mobile. So their plan is to transition toward short-form videos, Reels, which is part of Instagram. And this is the fastest growing content format by far. And they're doing this to compete with TikTok and to attract younger customers. But currently Reels monetizes at a lower rate than feed and stories because they show fewer ads. And as you know, Facebook gets 99% of their revenue from ads. So we can, let's see, I guess we can go to the SSG. So yeah, so analyst projections were about 14, 15, and I believe mine were 13.5 for both sales and earnings, and Jane has 14 and 13, and those are quite conservative. I'm not just. Do I have anything to say about pre-tax profits or management? No, I guess we can just go on to the second tab.
Do you have anything to say about the debt?
Yeah, so, they did say, so Meta, they made 877 million in Q4. They operated a loss of 3.3 billion. They lost 10 million last year, but they had anticipated this. So debt's going to increase again. They're really heavily investing in Reality Labs, in planning to reap the benefits down the road. So
okay, mostly spending R&D.
Yeah.
Okay.
A lot of it, they're hiring more people. The iOS changes is cutting into their revenue. So everything, there was no surprises. They've been talking about this for a while. And so now we're sort of in the midst of all of it. So if you go to valuation and let's see, so So I selected a low priced. The closing price last week was like 214. I selected a low price of 200, and a high price of just under 7. I can't see the numbers actually. Let me make the screen bigger. So 685. So I mean, it seemed like no matter what you put in there, the current PE ratio is 14.9, average is 24.3. Almost anything you use comes out to be a buy because the price is so low right now. So I don't know if we have room in our. I mean, I know we just sold Facebook a couple meetings ago, but it is a good buying opportunity. If we need, I don't think we need large or communication sector stocks right now, but if we did, it is a buying opportunity because if you go down below, the returns are with average and high PE is like 20, low 20s to mid 20s. If you go down below.
Megumi, I did ask this question before by email, but the Facebook spending $10 billion per year on the Metaverse research, and that is planned for many years to come, and then potentially the benefits will be only after a few years. So how is that going to affect the Facebook price to go up next few years? $10 billion per year is a lot of money.
Well, they lost $10 billion last year.
Loss,
but that doesn't mean they're going to lose that every year, right? So
no. The loss is because they are spending 10 billion without any benefit from the metaverse yet. And
yes, well, their revenue. So their operating loss was 3.3 billion. But I think they only have 2 years worth of data, and it has improved from year 1 to year 2.
Sorry.
And also too, I believe Meta is only like, I don't know, less than 5% of the total revenue, percentage-wise.
10 billion is investment in one area of their business per year for the next several years. Yeah, spending is 10 billion. Spending is 10 billion per year next few years. Income from benefit from that is 0 for next few years.
Where are you getting that? Are you looking at the 10?
I sent an article a couple of weeks ago, and Mahesh replied, and others also replied. Yeah, I'm wondering, can they afford to spend 10 billion investment next several years without any benefit from that?
Well, apparently they feel they can.
Well, yeah.
Really, we never know how much revenue they are going to derive from the lab, but we are pretty sure they have all the strategies in place because they have already mentioned this like a couple of years ago. They have been investing in this metaverse, and this is the of next stage of their company life cycle. So it's a matter of whether you believe this is a good company and they are going to deliver. And nobody knows how much revenue they are going to derive, but they already have everything charted out. So it's a matter of what you think their management is so far by looking at their past record. But of course, past record will not indicate, precisely what is going to happen, but just a matter of your judgment.
Yeah, the commentary on, I listened to CNBC, commentaries, several people are selling it and several people are buying it, of course, but the sentiment has changed. after the last report.
I mean, the reason I'm not recommending buy at this point of time because I'm afraid the price will go, still downward, just because of sentimental, feeling that people are holding for this company right now. But I think technically and fundamentally, this is a good buy at this point. But we can set a target price to purchase if we like to see how it develops in the future, near future. But I think this is already a good buy, as Megumi mentioned. It's a really good buy, entry point. But we will take a look at it technically by, pair later if we can.
Yeah, I guess if I was interested in buying the stock, I would buy now, and then if it dropped again, I would buy again, because it is a good buy now. And if it drops more, it becomes even a better buy. But and that's because I understand. I feel like it is a good company, and then they will come out of this.
You're saying that even though some of the reports are saying the social network the social network competition is increasing from other companies now.
What other companies? What other social network companies?
TikTok,
WhatsApp.
But our
WhatsApp is part of Facebook.
So WhatsApp part of it. IG is part of it. Instagram. So
yeah.
What other?
No,
Twitter.
Can I just make
Twitter
some comment?
is a social network company, and they're not doing so well either.
Yeah.
Which one?
Twitter.
Oh, Twitter.
Yeah. Yeah. Somebody wanted to say something. Go ahead.
Yeah, this is this is my view. I think I agree with Megumi and Jane that if whatever SSG you do, you're gonna get a buy. I tried to be super conservative in my SSG for Facebook. I had a high price. I use a very low P of 23 times, and I had high price of 526. My low price was also conservative. I used a low P of 13.5 times, and I got a low price of 137. And 137 was a price which they did achieve in 2020. That was a low price in 2020. So that's what I set my low price to. Now, in the end, I still get a buy signal on the SSG. Now, if you look at what's going on, my perception is that Facebook is facing a credibility issue. I mean, analysts expected a certain level of performance. They expected their user base, the number of users that they have, to grow at a certain level. The numbers didn't come in. And if you look at the competitive landscape, Facebook doesn't appear to be a market leader. What it's doing in IG is basically mimicking what TikTok has done. Suddenly, the social media video way of presenting is picking up, and TikTok was actually the leader in it. And what Facebook did was they were adapting. They used IG to have the real function, which is similar to what TikTok has. So I think there's some concern whether Facebook will be able to keep its market dominant position. That means, would the number of users continue to increase? Would it have that strength? So I think that's what, and the market usually penalizes if you don't deliver. The Wall Street market really penalizes, and they really sell. The big funds would sell. So what we are seeing is actually an oversold position here. Now, we have a position. Do we go and buy more? I think not. I wouldn't want to buy at this stage because I would want to see what happens in the second quarter or the third quarter, the next 2 quarters, before I really see whether Facebook is going to really pull out of this or not. Now, the investments, they make 10 billion. I think in the scheme of things, 10 billion is something which Facebook, from a cash flow perspective, will be able to stomach. But the reality is that, if you want to be successful in the Metaverse, you need to have a large number of, you need to have a user base got to be strong, because the metaverse is also a social, going to be a social or gaming area where people, can have a virtual representation there. So, and Facebook is not strong in the gaming area. It's strong in the social area. So we don't know how it will play out. So I think there are some concerns about how Facebook will address the future. Now, I don't think Facebook is going to collapse, but what I see is really a oversold position. Yes, it's a good buying opportunity, but I would want to wait and see how the results show in the next 1 or 2 quarters before I decided whether to buy or sell. Now is not the time to sell because I believe it's really underpriced. So if we are selling, we're really selling at a zone where it's undersold. That's my view.
Yeah. So if it falls the next 2 quarters, would you buy then?
If it falls, no, then I will sell. Then really it's not. I think if it keeps falling and there's no positive news out of what they're doing, their user base doesn't increase, they keep losing market share, the advertising revenues keep falling, then clearly Facebook has got a serious issue.
Mahesh, if I read your conclusion right, if you have the stock now, hold it, but don't buy anymore.
Yeah.
Okay.
That's my recommendation as well, because I think we don't know how the price is going down further. And it really depends on the first quarter and second quarter results. And I think it's good to observe, and we can have mentally, we can have a purchase price. If their fundamental sustain, then we have a target purchase price, we can go in at that time.
Yeah, they're already saying that they're going to have a less than ideal first quarter, so anticipate that.
That's exactly what I'm concerned of. That's why I think now, I mean, even though personally I already purchased, I already added my position, but for the club wise, I think we should wait.
Yeah, for the personal portfolio, maybe just look at the current SSG. This is 3 times more. If we follow BetterInvesting, we just want to double our price, right? So with the current projection and high PE, it is a triple. So we could even, if you want to, you could even lower more.
Can you go lower so we can see the bottom of the page?
Yeah, but Jay, if you look at better investing principles, if you look at the first one, the quality of management, there are 2 flags, right? There are 2 red flags, if you take to the first, the earnings and the debt, clearly those are 2 red flags. Right? If you look at the pre-tax profit on sales, the trend is not increasing. The debt to capital is also increasing. So it's clearly not there are red flags in terms of management.
Debt doesn't seem like a big deal to me. It's 10%. I mean, for so many other companies, they're way ahead of that. And it's had a good history as well.
So they have not acquired anything, Facebook, Megumi? I don't remember if they acquired anything.
No.
No. I think they achieved all this growth organically. They didn't. But then they did invest a lot since 2 years ago, because I was tracking Facebook. They have been investing and they have been investing, and they keep on saying in their earnings release that it's going to affect their profitability, and you watch out, and it's going to their rate will deteriorate. But then it keep on going up and up until last quarter.
Yeah, it's funny. They've been public for 10 years now, and every quarter they've been doing great, and then one bad quarter, everyone just freaks out. I don't know.
Exactly. So I just think we can observe, and we don't have to argue upon how much, how well they will be doing, because nobody knows. So I think, Uni and me and I have presented what we think, based on what we have seen in the earnings release and the conference call. So this is what you have been presented. And it's a matter of deciding whether we are going to buy in now or we are going to wait. And we can also use Carol's example technical analysis and just take a look at this company just for education purpose.
That would be fun to see. And then there might be better buys with other, you know, other stocks might be a better buy, or a portfolio might need something else. So I'm just saying SSG, and if there's an, you know, we can buy, it is a buy if you know, our club portfolio.
Right. What is it from club portfolio perspective? Another thing is our personal, right? Because right now the market is down. For me is, you know, I'm looking at, okay, what should I buy? And I do have a lot of Facebook, a lot of Facebook, and I'm just wondering myself too, what else should I buy?
Why did you pick 13.5% growth for sales and earnings?
I think, let's see, analysts were at 14. Yeah, so I just went a little bit less.
Okay. Even though the most recent quarter was -5?
Well, we're projecting 5 years out, right? So
if you look at value line, it's on the screen. And value line, of course, this is before the earnings was released for the fourth quarter. So value line was really, really optimistic. But based on 13% or 14% for revenue growth and earning growth, I think that's pretty conservative for high-tech company this size, right? That's pretty conservative.
It feels aggressive to me, honestly. Especially with 19% sales growth this past quarter, which is the lowest that they've had, I don't know, going back since COVID. If you take COVID out, they haven't had that low of sales growth in the last 10 years.
I think even you lower it, it's still, I think still will be a buy, because right now the high price is tripled if based on the current SSG.
Right, but what's our high PE?
24, 23. Oh,
24 and 23.
Actually,
I thought it was 27.
High must be 27, I think, 28.
27. You took the last year.
Right, but they're entering a period of slower growth, right? So wouldn't we expect the PE to kind of drop over the past?
What are your, you say earnings 10%? Oh wait, you say this quarter is a -5, next 5 years, I don't know.
Yeah, I think a lot of people's points around like what the metaverse is, how it will make money, right? So like, why will the metaverse make more money than Facebook today? I think that's a question that I have.
Why? Because
so that it's answered.
People will, you know, that's going to be the new sort of way that they interact with each other. That's what Facebook's, you know, they're going to use their AR, VR, you know, devices and meet in this virtual reality. And this is down the line, and it's not just going to be Facebook, right? Metaverse includes all tons of different companies that are going to have to buy into this. And
Right, but like, why will that make Facebook more money? I guess will they like show me more ads or like click on more things?
Probably.
I don't know what the metaverse is, so like I understand that.
I'm sure that will be their goal, to get more ad revenue.
Right. It just seems like it's pretty far off, I guess.
I mean, yeah, it's gonna take a while before they realize their benefits they have been investing in. But then Metaverse is definitely the trend, like just like 5G is the trend, right? So if we believe in that trend, and if we think Facebook could be the company that would deliver, then we will wait and see, right? Because we are holding the position and we can continue to monitor. But personally, I think this is already a very good entry point, and we will have to see what Peril recommend, you know, based on the technical analysis. But for club-wise, I will recommend to wait and to observe.
I have a question. I have a question for Matt. I know you do not like Facebook at all, But you didn't like Facebook was because the CEO, right? Mark Zuckerberg,
Yeah.
some ethical issues, nothing to do with company's performance,
Yeah.
right? Okay.
Yeah, I don't believe what he says. So when they say we'll make more money on the metaverse, I don't believe it, basically.
So you haven't believed anything he said in 10 years? And he's been right.
I think so.
Yeah, I mean, they made great acquisitions. Don't get me wrong, like WhatsApp and Instagram were great acquisitions.
Vice President and Secretary of the International.
What, Joanne?
I think I just admire Mark and his wife for devoting 99% of their Facebook stock to the fund they set up for the world's better future. And for that reason, I think they have no personal, agenda on this. They are just doing their very best to put the company up and running.
Who's that?
No,
Mark Zuckerberg and his wife.
Oh, okay.
I didn't hear what Joanne was saying.
Oh, sorry. That was I'm trying to post the YouTube link.
Oh.
Sorry, and I.
Oh, okay, gotcha.
Okay, thanks.
YouTube is Google, right? Yeah, YouTube.
Yes.
Google.
Mm-hmm.
yes.
They
So
didn't have
they
a
are
great
into
quarter.
gaming. Okay, so Facebook's into gaming. Microsoft acquired Blizzard, but for Facebook, they will still do their own thing. That's why I was curious if they have any thinking of to acquire other gaming companies.
I think their software for AR VR is called Horizon. But I didn't read anything about them acquiring
Okay.
any companies.
Okay, so should we play around with the SSG or should we move on?
Move on.
Okay. Piero, are you ready to do your Amazon presentation? You're muted, by the way. Maybe.
Joanne.
Yes. Hi.
Joanne. Okay. Yeah, I'm ready.
Okay. Can we show your screen?
Okay, show my screen. Okay, so I'm gonna go to my SSG. I guess everybody sees it?
Yes.
Okay. Anyway, the first here on Amazon, what I did was that I took out the first 4 years, 5 years that we have a graph for, because it looks ugly. If I put the graphs back in, shucks, error message, your session has timed out. Ha. Okay. Okay, I have to sign back in, do I not?
I think you just need to refresh your screen.
Okay, so I just refresh by clicking here. Okay. So okay,
We are looking at Amazon, we? Yeah, we are.
yeah.
Okay.
Could we put it on the full screen? It's a kind of small.
Oh, do I do that on my part?
Yeah.
You can.
How can I do that? It's
You
occupying.
can also
the whole...
zoom in on your.
Yeah.
You can also zoom in up top.
Jane, I zoomed in on mine.
Okay, can I push control?
But it is a little bit small. I think the guests, yeah.
Okay. Control plus, I think it is.
Yeah,
Yes. There you go.
Better?
that's good.
Yes.
Yep.
Okay. Okay. So anyway, I took off the first couple of years because the graph looks kind of ugly, right? It just kind of falls apart here in the 2013, 2014, and it's just kind of messing everything up. So I deleted that out just to get rid of that bad years there. Okay, hold on. Okay.
Piro,
Yep.
just as a first cut, just take off all the negative numbers. Negative numbers cannot be plotted on the graph. Then it will look so much better.
Okay. Yeah. Okay. Anyway, the growth rate here for these years from 2016 was about 28%, but I forecasted it at 15. It seemed like a half decent estimate because most other people were guessing, but actually what happened, they were guessing at around 25, 26 for sales and 20 in the case of Value Line. But what happened was that something took place.
Hello?
Hero? Can't hear you. I can hear you at least.
I can't.
Yeah. Huh.
Ira,
Is Pierre?
I think you got cut out.
He's still green and got the volume thing on, so there he goes.
Piero, you might have your microphone muted on your headset because you're showing that green on the microphone, but we can't hear you. Oh.
So Morningstar, right? On February the 5th, I think, or the 4th, they gave a fair value estimate of about 4,100. That was their fair value estimate. Then on February the 12th, or the 14th, something like that, they gave a fair value estimate of 3,800 or 700. So this was kind of sober second thoughts. You know, Amazon did better than Facebook. So everybody just piled on to Amazon as kind of a hero, but they didn't do that great, right? Most of their segments kind of underperformed. The only one that saved Amazon was AWS, Amazon Web Services. Amazon Web Services, it turns out they design and build their own chips for their servers. And, you know, all the big companies, a lot of big banks just moved over, says, yeah, we'll let Amazon handle our cloud computing. It says, we'll let them do the logistics for us. So they got big business that way. Okay, so anyway, Value Line projected a sales growth rate of about 20% for 5 years. But Value Line produced their report on February the 5th, after Amazon announced their results for the fourth quarter and the year. Okay, what's this? Recording past specified recruiting. Cancel this?
Yeah.
Cancel that, okay. So what I said, I'll go a little bit more conservative than Value Line, went to 15. And then in keeping with earnings were a little bit, well, actually earnings were projected even higher than sales, generally all around. But I said I'll keep them the same, around about 15. So for sales and earnings will be 15. Okay. Now on the bottom here, pre-tax profit seems to be going up. Pre-tax profit is 5.3%. This is a margin. Now Value Line, Morningstar, projects that their margins are going to increase from 5.3% to about 8% by the year 2025. Right. Their margins are improving. Okay, and the return on equity is about 20%, 22%. Yeah. Debt to capital is 49%. So that was a little bit of a concern. So what I did, I plotted debt. Total debt is the red line, deep red line here, and it seems to be more or less keeping in line or slightly lower trajectory than the earnings per share and pre-tax profit. So earnings per share and pre-tax profit seems to be have a higher trajectory to the right, and debt seems to have a lower trajectory. So it means that, you know, they're doing something right. Their debt is proportionally going down. Okay, and let me see the analysts. Here was projecting 16% for 2 years and 19% for 5 years, long term. Well, we assume 5 years, right? So, but that's it's still to be seen. Okay, so go over on here, valuation and return. But I crossed out a lot of these large valuations, large PEs, and came down to an average PE of about 71. And the lower PE ratios, I crossed out a couple of very high low PEs and came up with an average low PE of about 47.1. Okay, and my projection here was, so I had a average high PE, future average high PE of 52. Price per share of about $130, 36, and forecasted high price of about $6,700. And my future average low PE will be about 40, which is kind of in keeping with what were the historical lows that they had. And the trailing 12 months earnings per share was 64.78, so it just automatically brought that down. And they got a future low price of $2,591, which is, you know, about $500. Well, it was about $400 below where it is now. But you know, with Amazon, what they, you know, the analysts rethought it, because what you really think about Amazon comes to mind is that they're a retailer. They sell goods, and those sections failed recently. The only thing that succeeded spectacularly was the AWS, the web services. All right, so they're beginning to rethink, you know, maybe Amazon is going to have problems in the future. And what the problems that they outlined were, there's the threat of regulation in the US. There's a threat of regulation overseas if they decide to move overseas. There's and if their movement overseas is successful, they're gonna have to spend a lot more money, because the infrastructure overseas is, generally speaking, less well developed than it is in the US or Canada. And then Amazon is moving into some other areas, for example, groceries, luxury goods, entertainment. It might not be as successful as we hope. So there are those considerations. So, you know, so I decided to pare back, to be on the safe side. Okay. Yeah. Okay, so if these are the prices that are left to stand, then the upside downside ratio would be about 7.3 to 1. Right now it's in the buy zone in terms of price, because right now the price is, what is it, 3,100 or $3,092 or something like that, $3,093. So it's getting pretty close to the 3,000 mark, which, and my low price is 2005, almost 600, 2,600. So it drops another $400. It would be at my low price. So right now it says buy. And there are a number of reasons why it says people would say buy, and you can kind of make an argument for it in that, let me see my notes here. One of the things that they did right was it increased the cost for Prime members, right, from $119 to about $139 a year. Advertising is a growing section. It's going to be one of the bigger cash earning components because advertising is eyes. The more eyes you can put on your advertising, the more it sells. And the way Amazon does that, it gives Prime membership to people, right? You pay $139 a year, or it used to be $119. You get to watch movies. You get to get your goods delivered in the next day or the next hour, or even, you know. So there's a reason why people will go and stay. Amazon's web services, you know, they're taking on big corporate clients, banks, you know, other tech companies, because they developed their own cloud service that's really quite well developed, and it's selling very well. They're moving into other areas like I said, luxury goods and groceries. You know, they might not be successful in there, so there's a bit of risk there. Right? So it's a bit of a balancing act between risk and potential growth. Now, as a business model, they love Amazon. Everybody loves Amazon. But right now, it's spending money. And it's spending money overseas. It's setting up operations in Europe. It's investing money here, there, everywhere. So cash flow might be a little bit tight for the moment. But I was looking at some of their transcripts for the earnings or earnings reports, and they say, yeah, they say for this coming year, this first coming quarter, things are going to be a little bit tight, maybe for the second quarter as well. But after that, everything should fall into place. And they don't have any plans of acquiring, well, MGM, right? They don't have any plans for anything after that. They don't have any plans for expending a lot of money anywhere else. So I would say that, you know, at this point, seems like a buy if you want to buy it.
I have one question here.
Yeah.
Generally, I mean, Amazon is now an established company, even though it is very, very innovative in entering in new businesses.
Yeah.
But the 70, how much is your high PE 52 for established company?
Yeah.
Isn't? Do you think it's okay, or it's high?
Well, yeah, it's high. You know, what's it called? The law of large numbers is going to begin to play, but in comparison to what it was, we brought it down to quite a bit. You know, there are multiples here that were like 100, 90, 88. So I'm bringing it down to 52. But then the other thing too is that, you know, I'm making projections for 5 years, but it doesn't mean that I'm going to leave this as is for 5 years. In the next quarter, I'm going to look at it again. Right? The next year, I'm going to look at it again. So I'm always kind of, you know, shifting as the market shifts, as the professionals shift their thinking, I'm shifting my thinking. But at this point, it looks like a buy.
Kira, I have a question.
Yeah.
Why are you using annual as your starting point?
Well, because it's the fourth quarter is the annual. Right?
So if you use...
there is no quarter result.
So if you did quarter, then it wouldn't change the numbers at all?
No.
Okay.
Because the results came out in February, but that was for 2021. Their first quarter ends in January, February, March. They'll report their first quarter in April.
Okay. can we look at the quarterly data
Quarterly data, okay.
and then scroll to the bottom?
Yeah. Okay.
Can you scroll to the bottom?
Scroll to the bottom, okay.
I just want to look at the trailing 4 quarters, the last 3 columns. So it looks like there's sales is trending down, pre-tax profit trending down. Everything's, I guess the earnings popped up a little bit on the last quarter.
Yeah. Well, the other thing that they were saying that Amazon, they said, because of this coronavirus that was going on, right? They said that wages had to go up. The American economy is doing great. Unemployment is very low. The economy is on fire, so they're going to have to raise interest rates. And so they're going to have to pay their employees more. Some employees got corona, so they're off. And so they have to be paid because they're still employees, but they're off, and they have to hire someone else to do to fill in the shoes for that one who's sick. So they're spending a lot of money. And so the thing was that they're going to run out of money. But if things improve, this coronavirus is past, the transportation, shipment, canals, boats don't get stuck in canals and things like that, then it should go back to more or less what it was before. But of course, it's a much bigger company, because now it employs 1.6 million employees. So you just can't keep growing it the way it was.
Okay. Can we move on? We're at 7 o'clock right now.
Yeah.
We still, we'll go on, we'll vote after we do the guest comments. Is that okay?
Sure.
Okay. Let's see. I'm going to open up the microphone to our guests. So Brian, do you have any comments or? So Brian looks like he's muted himself. Christian Posada. Oh, no, there's Brian. Hi, Brian.
No, it's very, very in-depth discussion. I learned a lot, in the education on the technical was well presented. Thank you.
Thank you. Christian. You're self-muted, Christian. Edwin?
Oh, I'm sorry. Yes. No, I'm just listening. It's very good and very good information, especially on with the economy the way it is with Facebook, to watch. It's a close watch because it's very tempting because it's always been so high, and now it's such a good price, and it isn't a buy. But you're right. It's better to probably stay on the sidelines, keep a close eye on it. Otherwise than that, I have no other comments.
Okay, thank you.
Thank you.
Edwin. Edwin, it looks like you're self-muted. You can. Joel. Looks like you're self-muted. Oh, hi, Joel.
Hello. Hi.
Hi.
I enjoyed the interaction, the discussion on SSGs, and also the educational presentation on technical. So I learned quite a bit. I do like how the interaction took place. In other words, when an SSG is presented, you do get challenged, not challenged, but you do get asked questions and for in-depth, a little bit more of an in-depth knowledge as to what's going on with the company. So it kind of forces you to be prepared. So I enjoyed the presentation. Thank you.
Thank you, Joel. Thank you, Joel. Hi, Mags. You're self-muted. If you would like to say anything, Mags. Mike, Vincent? You're self-muted. Oh, hi, Mike.
Yes. How are you guys?
Good.
Good. I'm in a public setting. I just want to say the Facebook discussion was great. Facebook does have a gaming venture with Oculus. I don't know if you guys are familiar with the Oculus headset. But no, I just chimed in today because I wanted some ideas for my stock pick for my team. So I thought you guys were doing maybe a stock presentation today, but maybe I'll catch you guys next month and see what you guys are presenting.
I have a quick question on the Oculus. How do you like it?
Oh, I don't have it. I just bought it for my daughter, and she enjoys it. So
Great. Okay.
that's all. That's all I know about it.
Okay.
Okay.
Thank you, Mike.
Thank you.
Thanks, guys.
Philip. Hi, Philip. You're self-muted. Okay. Pope A. You're self-muted. Oh, hi.
Hi, I enjoyed the presentation. It was interesting, a lot to follow and take in. But I did get the name of the two people to follow who do a lot on that. And as far as Facebook, I like the fact that the gentleman, the person that says he's not crazy about him. I haven't been crazy about Mark Zuckerberg since he created it and how he took it over and what it was about. You know, the foundation of it isn't really good, but that's not, you know, doesn't mean it won't succeed. But when he said, someone said he put 99% of his money in there, and I'm thinking, what shell companies did he not use? Because I don't think he would have put 99% of his money in there. He's just not that kind of guy. And but I like what you guys said about holding weight, but it's up in the air, you know, holding weight or not holding weight, but wait or either buy later. And Amazon, I don't know, it's interesting, but that's all I have to say.
Thank you very much. Ron, you're self-mute. Hi, Ron.
Hi, how are you? I just finished my own investment club meeting by IMIC, and I was just able to catch the last part of Facebook and then the Amazon. I think the people really do great presentations and the research they put into it. Of course, everything comes down to judgment, but I think it's a wonderful club. And I have a question for G. I sent her a PowerPoint on my Texas Instrument. I wonder if she received it or not.
Which one, Ron?
Texas Instruments.
Let me
I
search.
sent it,
Probably.
I sent it about a few days ago.
Oh yes. Uh-huh.
Oh, okay. I just want to make sure
Would
you got
like
it.
me to share with my club?
Yeah, but you know, I got to make a change.
Thank
So
you.
go ahead, pull it up. Can you pull it up for a second? There's a change I have to make.
Oh yeah, sure. Oh, okay. Let me
You want
download that one.
to do that offline while I continue?
Sure.
Can you just?
It's only just a few
that you want to make a
seconds.
point?
Yeah, I just want to show something.
Do you want to make a point about that one? Okay. What's your point? I'm on it.
I have to make a correction on number 15, slide 15.
Okay. Is this your point is related to similar? Okay, hold on. Let me.
To the ROCE.
Okay, just a second. Let me share my screen. Just a second.
Okay.
Okay.
So if you look at slide 15 and you bring it up, you see that. Okay, that formula is wrong because it says net profit before taxation, and then you divide by capital employed. So go to slide 16. The next slide.
Is that some? Okay. Income
and then
statement.
You see where I got that box up there, the box, the golden box. It's supposed to go 3 more places down.
Okay.
It's supposed to be the income.
I am right now. Okay, I need to download because I'm right now in the hotel. My internet is just terrible.
Don't worry about it. You know what?
Is this something to do with?
Can you do this later so I can get through the?
Yeah.
Right. I was just going to ask him: is this something to do with related to the companies that we presented, or is it totally something different?
No, it's different. Just continue with what you were doing with your club, and we'll talk later.
Okay.
Thank you.
Okay. All right. Thank you, Ron.
Thank you, Ron.
Okay.
Tony. Hi, Tony.
Hello, thank you for letting me join. It was a lot of information that's new to me, but it was very interesting. So, and I thought the discussion about Facebook and Amazon was also, really interesting. So thank you.
Okay, thank you. Okay, so let's see the next. So now we're on to club business. If the guests, you may attend or be excused. Philip, you have your hand raised, so I'm not sure if you still want to talk. You're self-muted. Okay, so your hand's down. Okay, let's see.
Can you hear me?
Yes.
Yes, this is Phil. Can you hear me? The presentation was excellent. The technical analysis was very, very interesting. And I just wanted to point out that the sum of these two companies that we discussed, Facebook and Amazon, I mean, they could split those companies up. I mean, Instagram could become an entity all on its own, and as could the WhatsApp and the Messenger. And this reality thing, the Metaverse could be this in the fashion. Consequently, I think the sum of all its parts are probably, it's difficult to calculate the number.
Excuse me, your voice isn't coming through very clear. It's very muddled.
Oh.
Do you have a different microphone? We can't understand what you're saying.
How about now? Can you hear me?
No, we cannot.
Can
you just go ahead and type your comment, Philip? Can you just type up your comment or your question? We cannot hear you very well.
Essentially, can you hear me now?
Thank you. Okay. Okay, so let's, do we have any recommendations or motions for Amazon or Facebook? Or Piero, Jane had wanted to see if Piero could do a demonstration of some technical review on, which one, Jane, on Facebook?
Yeah, that would be great.
Piero, can you bring up on your stock charts?
Yeah.
And I'm going to give you the screen.
Okay. I'll go to what's it called, Yahoo Finance.
Okay.
And do it there.
Do we want to do Amazon or do we want to do Facebook?
I want to see Facebook.
Okay.
Yeah.
Yeah.
Okay.
Facebook.
Okay. Let me close this. I think yeah. Where's yeah? Okay. I'm just gonna have to close something. I'll close this. Open up Yahoo.
Yeah. If you think stock chart is better, you can do stock chart.
Stock charts?
Yeah.
Oh, okay. We'll go to stock charts then. Okay. Nope, stock charts. Oh, I was just there the other day. Okay. Okay, go into stock charts.
Just click on that. Yeah.
Let's see. Okay, so here at stock charts, it's paid service, but so there's stock charts, TV, chart school. You can go for that. That's free. So go to charts and tools. Okay, and we're gonna go for Facebook.
Yeah.
And that's FAS.
No, FB.
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 B is in boy.
Yeah, FB. Okay, Meta Platform, Facebook. Okay. All right. So here's the Facebook chart. I don't know if I can make it bigger. Is it easy to see, or?
If you can do the Control Plus, that'd be great.
Okay, I'll try to do the Control Plus. Better there?
Yeah.
Okay. So I'm going to go down a little bit. Okay, so right now we have the top indicator here is the relative strength index, and it's oversold. It's way oversold. 30 would be around about here, right? And 70, well, there's 70 right there. This would be 30, so it's oversold. So now is a good time to buy. And here we have the 200-day moving average, the 50-day moving average, and let me see if there's, I usually have the 20-day moving average as well. Okay, so the 50-day moving average will be in the darker line, and the 200-day moving average is the red line. So the darker line, the shorter moving average, is crossed. The longer moving average on the downside, so this is the death cross, and it's going down. And we could see here on the volume at the bottom, there are a lot more of these big red rectangles, a lot more sellers than there are buyers. That's a buyer, but this is seller, 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 seller. Everybody's selling, they're getting out. And the candlesticks, because they're colored red, the colored ones mean the end of the day lower. Okay, and then down here, this is the MACD. This is the MACD line is the darker line. The signal line is the orange line. And right here, the MACD line, the dark line, is way below the signal line. So the price is going down.
So you don't want to, so a buy opportunity would be when it crosses that red and goes up?
No, the buying opportunity is when that black line crosses the orange line, goes down.
Okay.
Yeah, because this is the price. Well, actually, the price has kind of collapsed because this is the 50-day moving average is the dark line here, right? But the price is below the 50-day moving line, so it's likely to be a buy on the SSG, right? But look at it, it keeps going down. So yeah, I'd hesitate a little bit. You don't know how far down it's going to go. But if you are a gambler, I would buy now.
So what are you looking for when it's starting to be, what is it, bullish?
Yeah, when it's bullish.
What are you looking for that 50-day to cross back over the 200?
That's right. When that 50-day, the black line starts pointing up and crosses the 200-day moving average,
that's
then
the cross.
That's the golden cross.
Okay.
Yeah, and then usually you see here on the MACD, the MACD line is a dark line, crosses the orange line on the upside right here. That's the buying opportunity. And if you kind of go straight directly up above, and that's about the point where this big red candle says it's down. Well, the MACD is telling you it's going to go up, and it does. It goes up here, there, and now it's beginning to whipsaw, as they say. It's very, very close, going in and out, and crossing each other back and forth. So they're undecided. Yeah.
Pierre, can you
Yeah.
show a longer time frame? And I like to look at 20818 because they have a big drop at that time. I like to see how it turns around.
Okay. Longer time period.
Yep.
Okay.
Covering 2018.
Okay. 2010. The date. Okay. Let me see. Chart attributes. Daily range bar chart. Yeah, I'm trying to find out where the heck I can give it a longer view. Light symbol, inspect. Probably, okay. Period, daily, fill the chart, no, daily, period. Okay, give us a weekly chart. Okay, weekly chart, update. Okay. So this is 2020,
So
21.
maybe the Yahoo Finance gives you the.
You want to try that?
I know big charts. I know that big charts you can put in the number of years.
Yeah, Yahoo Finance I think is easier for me. Because I usually use that.
Do you do Yahoo Finance?
Okay. Yeah. Let's go to Yahoo Finance. Because stock charts. Yahoo. Okay. Finance FB. Okay. Now in Yahoo Finance, you go to chart. Okay. And so here we have the chart. Now I use that. This is how long is this? This is 1 year, I think.
So go to 5 year.
Go to 5 years. Yeah. Okay. So for me, the blue lines are the 200-day moving average. The purple lines are the 50-day moving average, and the red lines are the 20-day moving average.
There's two blue lines.
No, one. This is the blue line. This is the purple line. And this is the red line.
What's that blue line down below?
That's a 200-day moving average.
Oh, 200. Okay.
Yeah. So the blue is 200-day moving average blue, 50-day moving average purple, and red is 20-day moving average.
And the jagged line is the price, right?
The jagged line is the price. Yeah. We can change that view by going here, right? We can make it with the candlesticks. We can make it with the bars, you know, the colored bars. You can make it the area chart. You can do a whole bunch of things.
So what are we looking for here?
Well, Jane wanted to see the 2018
turnaround.
Where is 2008? Is that?
Okay, let me scroll down here a little bit. 2018, right there, right there. That's 2018.
It's January.
Yeah, 2018 would probably be January. We should be around about here.
So what were you looking for, Jane?
I'm looking for how it turned around because at the time they have a big headwind, but they turn around. So apparently after the fact, look at how it is technically.
So the price dropped there.
So the price dropped there, yeah.
And then
and it really dropped in like after like the second half of 2018, and then it started back. So what happened in the second half of 2018? Did we own it?
Okay. What we should do there is to go back on the fundamentals and find out what happened on the news, and see if we can pick up anything on the news feeds. See what happened there. There's also another price drop over here, which would be
that's the pandemic.
Excuse me, I have a question about that. Is that in relation to some of the bad press that came out after the election?
In 2020?
That's 2019.
2018.
Yeah. When they had the big scandal about the company that was using their metrics and all that kind of stuff, was that price drop related to that?
No, March 20th, 2020 was the date where it declared it is a pandemic.
No, but we're talking about 2018.
2020 was the pandemic, but I'm wondering about the software and the company
earlier
scandal
one.
that they had that was earlier related to the our presidential election.
Yeah, that was before that. March 2020 is the pandemic.
Right. No, we're not talking about that, but I'm talking about the scandal that they had with the software. I forget the name of the company that was, that they allowed to use their data.
Right. I thought that was before that, right?
Yeah, that was before pandemic. That was pre-pandemic. So that's what I'm asking. Is that price drop
I
related
was
to that?
wondering if the previous drop, not 2020, is related to that.
No,
Yeah.
not 2020, but the drop in 2018 or 2019.
Right.
Cambridge Analytica.
That's the one. Cambridge
Cambridge, there you
Analytica.
go. There you go. Cambridge, yes.
Yeah, Cambridge Analytica. So could that price drop be related to some of the bad press that was going on about that at that time?
Yes.
Mm-hmm.
Yes, it is.
Cambridge.
Okay, so yeah, that would explain that. So it would take a while for them to recover from that, and they sort of did. So
yeah,
but the PR is still bad, but still.
I'm actually surprised, the latest, the woman the former employee who came out, there's a big lawsuit out right now.
Right.
It's
She
still
testified
pending.
in Congress and stuff.
Yeah, I'm surprised it hasn't had more of a negative effect. Of course, it's all still in process.
Well, that may be part of the sell-off now is related to not only their results, but also that.
Yeah.
People may be more willing to sell it now because of that scandal. They may be more willing to sell it now that their results are not pristine.
True. Yeah.
That scandal was in April 2018.
Yeah, so that's when that price would have dropped.
Yep. Mm-hmm.
Cambridge Analytica. It took them a long time to take responsibility for that.
Yep.
Hey G, on 2018, you also have to take a look at these capital leases that they had to write and put it on the balance sheet. So if you look at all the stocks and you take a look at the ROICs for all the companies, they dropped because the capital leases had to be now accounted for, which were off balance before. And so a lot of stocks took a big drop because they had to now declare those capital leases. That was in 2018.
Are those the same leases that we now count as part of debt?
Yes.
Yes.
Okay, thank you.
So what is this chart saying about buying?
Buying?
Right now? Yeah, right now.
Well, the relative strength index will tell you to buy right now if you think it's going to survive, right? But like we say, catching a falling knife.
Yeah. Okay.
I
We
thought,
should keep it.
I thought the technical indicators are saying it's still selling. There is no indicator that seems to indicate there is a turnaround.
No.
Yeah, so it's still a sell. There are more sellers than buyers in the market.
Yeah, there are more sellers. Yeah.
Yeah. So until from the technicals, until you see a turnaround,
the
buyers coming in, that means there's a swing up, then you go in, right?
Yeah. So usually, and the nice thing about that is if you take a look at candlestick charts. Let me see here. Okay. Candle. Okay. Hollow candle. No. Go for candlestick charts. Okay. Now we're gonna zero in on these candlestick charts. Okay. Right now, what's happening here? These are all sellers. Red is down, 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 down. Here, the buyers and the sellers were really arguing it out. And they just kind of, push the price up to the top there, push the price down there, and they kind of settled in the center here. The next day, they all sold. And they're selling and they're selling, they're selling.
What day is that?
This must be, let me see.
It's the day that earnings.
30th of January.
30th of January.
Okay.
Yeah. And they're still selling. All right?
When did they report?
They reported on the February 2nd.
Yeah. So it was before the report, a couple days before.
Were there any leaks anywhere?
Probably. I wonder who's selling.
Might have been insiders.
Yeah.
They knew, they saw.
They always do.
Institutional investors.
Yeah.
So, okay.
Yeah.
So where's the price? Where's the blue jagged line on the
Okay,
top?
the price is right. These are the price bars. These are
Oh, gotcha.
candlesticks.
Okay. Gotcha.
Yeah.
Okay.
Oh, okay.
Yeah,
So,
because yeah,
So there's no line, it's just the candlesticks.
that's right. The candlesticks, because
Okay,
the line.
okay.
Yeah.
All right.
The
Okay.
candlesticks.
so when
this
it
is-
starts to go up, will it turn green?
Okay.
When
Yeah,
when they start
like this.
buying.
Yeah, right here, right? So here it is, the buyers are still have the dominance, and but the range between the buyers and the sellers is very small. The sellers are just a little bit more persuasive. Here the next day, now the sellers are coming in. Now you say, okay, the price is going up. The next day they did. The price started here and it ended up there.
Mm-hmm.
Right? And then here the sellers
Over.
were a little bit dominant. And so the price started up there and it ended up down here. And then, okay, now they're arguing back and forth. And the sellers seem to be having the upper hand. The sellers kind of pushing it back up, kind of maintaining it. And this is, I guess, just before the release of their earnings and things like that. And when the earnings hit the release, that's it. Everything just went south.
Okay, it's 7:30. We can continue the conversation or we can try to wind up. Your choice.
Well, it's 10:30 in New York.
Yeah, okay, 10:30.
Just
So
saying,
what's
it's almost tomorrow.
Okay, almost tomorrow.
What's our portfolio situation, Ready? We have 5,000 in cash, right? Something like that.
5,000 or 3,000?
It was
I can't
3,000.
remember.
3,000 something. Yeah, 3,000 something.
Yes, so are there any motions?
Yeah, 3,064.
Well, it sounds
So we have a 13 members, 11 stocks?
No, we have 13 members, 13 stocks.
Oh, perfect. Okay.
So do we have a balanced portfolio as it is if we don't buy anything?
We don't.
We don't have a
Well,
balance?
pretty
It
close.
doesn't look like it. Remember, we look at the technology only like a 3%.
Ready?
What about size?
Yeah, but just because we don't have technology doesn't mean it's not balanced.
Yeah, because
Like, yeah,
So-
is there anything that's recommended for the portfolio overall?
If anybody is fresh on Google research, we can buy some Google.
Oh, how much do we have of Google?
Google, we have annual report next month.
Okay.
There's something going on with Google. I would like to talk about it next time.
Okay.
Okay, talk to me about it, Jay, before next month.
We
So I
have
know what you're
annual-
going to bring up.
Okay.
Okay.
We'll have annual report next month, right? Yeah.
Okay, so real.
Yeah, I'm doing it. So that's what I'm asking.
Yeah, it's his stock. Okay, so
okay.
Stock study signups. Mahesh messaged me that reminded me that we were doing it based on sectors sectors. So I'm not sure how you all want to sign up for stock studies. The next one that we have is not next month because it's a bunch of annual reports. Let's see. So we've got April, June, July, September, October. So how do you want to handle stock studies? I kind of want to
I'd like to volunteer for July because I like July as a month for my schedule.
Oh, July's good.
But whatever you want to do.
Okay, so what do you feel? I mean, can you just sign up for the month that you want and then select the sector? Mahesh, what were your thoughts on that? We've kind of gone over the main sectors that were needed challenging. I don't know. Mahesh, are you there? He was saying one.
Yeah, no, I guess I'm just feeling the vibes in the club. Recently there were resignations and people saying their workload is too much. They got too much to do. So based on my involvement with sector studies, it gets quite intense. We meet almost every week. So I'm concerned whether we have got the resources to do sector studies like how we did it when Tom Lowe first was around.
But how do you think it should be done then? What would be an alternate?
I don't know. I don't know. This months are a few busy for me, so I will probably put, if we want to do a sector performance, I'll probably do it later in the year. But I guess I'm open to whatever you all want to do. I'm easy. I'm just reminding what you have laid down for the club. That's all.
So shouldn't it be driven
Joanne,
by?
remind me to ask a question later on. Jay just texted me because she dropped off accidentally.
Okay.
But I got to ask a question to her later on.
So what was that, Megumi?
It seems like the sector study should be driven by where we want our portfolio to go. Like that's why I was asking, do we like is our portfolio performing now? If not, then how are we going to improve it? Do we need to diversify into another sector? Well, then we should do a sector study. Or do we need to get rid of large companies? And but I think we need to know what we're shooting for.
Okay, so how often should we do the that Tom Loftus? Should we just do that once a year then, where we find out where our portfolio's at and then target our stock studies based on that? Because it seemed like it didn't really have an effect when he'd flagged companies, but we never sold or bought based on that. So I'm not sure how effective that was.
Well, that may have been an emotional thing too. If we're willing to accept that whatever comes out of that are the companies that we should either trim or sell or buy, then that would be great if we actually did it.
Well, and I think Tom was saying it's just a flag. It doesn't go into the in depth on what's happening. It's just based on metrics, not what behind the scenes activity. Like it doesn't really know that if a executive is getting sick or quitting, and if somebody got sued, it doesn't go into that. So.
And also the most important thing is that Tom based on the SSGs.
Oh, which is
done by members, which are not double checked.
So what we could is we could just go by what how Reddy gives the diversification.
Mm-hmm.
Those charts, we could just go based on that size and sector diversification. You just keep it simple.
We can look at what sector is underperforming.
Okay. Yeah.
Yeah. Like we have a checklist, right? Like we should go 25-50 for size, 25-50, 25 for size, and then like not more than what was it, 10 or 15% in one company. We had like that list.
Oh yeah.
Right. Mm-hmm.
Okay.
And then if we meet all that, then we can just focus on education topics. But once we something's happening, Facebook just crashes, then then we can go into a sector study to see if we need to get out of communication or.
Also, we should do what Tom Loftus did at least once a quarter to find out what stocks we have that are not doing good, what stocks possibly to acquire, to be replaced.
So, Reddy, one of the issues was that it's based on SSGs, which is subjective. So we're not really sure how effective that is.
Well,
What about using the PERT as a starting ground?
But isn't the PERT SSG based too?
Yeah.
It is based on the SSG judgments. Yes, it takes the judgments from whatever anybody puts in their SSG.
Yeah.
But what else can we base it on?
Well, I was just going to say the diversification and the size.
Diversification.
But then how do, yeah, okay, so diversification and size is one thing, but how do we know which aside from size and numbers, how do we know which sector is performing and which sector is underperforming?
Don't we have?
No, not which sector, which stock is we have is underperforming, which stock is doing good.
Well, it could be stocks, but what if we have more than one stock in a sector? If that sector is if one of the stocks is not doing well, but the other one is doing great, and that sector is outperforming, you know, versus all of the others or some of the others.
Yeah.
I think that we should do the go sector by sector, and that way we hit all the sectors.
Yeah, we hit every company, we hit every sector. We know how much we have, how much we don't have. We already know what sectors we don't have.
Yeah.
And some of them we may or may not be interested in.
Right.
And some of the sectors that have traditionally done well, it is possible that some of those companies may be starting a very slow and painful decline, and we may be looking for something else, but we don't know until we look at the sectors.
Right. So I think we'll just, if we looked at sector and sector diversification and size, be hitting, you know.
And industries within, yeah.
Right. Okay.
But it is.
Oh, go ahead.
Go ahead. It does take a lot of work to do that, though.
And if I remember our portfolio performance at the beginning of the meeting, it seemed like we were below the other indices, weren't we?
Yeah, this quarter.
That may be because of the general price drops, yes?
Was that just this quarter?
No,
I thought it was like
we've been trailing for a while, but I'm not sure. I mean, we'll have to take a look.
Are we meeting, I mean, the 15% or what's our goal? Or overall?
Yeah, we're
15%. Yeah, we actually is slightly below than the indexes, even last month, I recall.
We've invested in some speculative stocks too. We're not just, you know, the top, whatever, 100. We're not the S&P. Okay, so I guess this is another, I mean, sorry, this is going longer now. Now we're, what's it, 10:42.
There's no motion, so that's good.
Okay, so okay, so I think we're going to table that about the stock studies, because next month, let's see, we've got the annual reports. Jay, I don't think.
Do we want to consider it for the month after?
Sorry, I didn't hear that, Isla.
That would be April. Would we want to consider starting to do something with the looking at the portfolio in April?
Yeah, maybe we look at the portfolio. We just take that instead of doing a stock study. We, as a team, we look at the portfolio. What do you think?
Yeah, we could all discuss it as a group. Sure.
Yeah.
And Jane's going to give an education topic on Berkshire Hathaway, I think, annual letter. Jay, I don't think Kim can give that. She can't have 30 minutes when we have 1, 2, 3, 4, 5, 6, 7, 8, 10.
No, not in March. That's something. Sorry, I lost my connection. She can March. We have a 2-minute annual report. So Kim is only available either March or May. So.
Well, May she can't do it either because then we've got all those quarterly reports. We've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 quarterly reports.
Yeah, everybody's quarterly reports.
11 quarterly, 5 minutes is 55 minutes, 1 hour. So, yeah, it depends on by yourself. Because I was just trying to do math myself.
Could we
Let's just say 5 minutes a quarter.
Could we reduce the educational time?
Well, no, not. We're having a guest speaker.
Oh, wait, which month is that?
Can she do it June or July?
I can ask.
Yeah.
I can ask. Which month do you want? Okay, I'm looking at signing stock.
Do June, July, September, or October?
Okay, I will talk to her.
Okay. I'm going to take her off of that. We're not going to have an education topic next month.
Next month, right?
Okay.
And we'll do the roundtable sort of portfolio thing in April?
Yeah. And education, and Jane will do an education piece on.
Right.
Okay. How's that sound, guys? Everybody?
Oh, so April we have a time. April we only have your book. So we'll have a one annual letter, education topic, and we don't have any stock studies. So we could do the performance review,
Yes,
right? Is
that's
that
a
what you
great
guys
time.
talking
That's a
about?
great time to do the
Okay.
portfolio
Okay.
review.
They
Yeah.
said, yeah. They said.
Yes.
Yeah.
And then for the June, we will do either June or July. We could do the cannabis. June or
Okay.
July.
That's
topic.
great.
Yeah.
Sure.
Okay.
Why
I
not?
will let her know. I will let her know.
Sure. Sure.
Okay.
Sure.
Or September or October.
Yeah.
I was just looking at a stock study and it's all empty. There's no quarterly or annual reports. So I'll let her pick.
Okay.
Okay.
All right. Okay. Meeting adjourned. I'm going to stop the recording. Thanks, everybody.
Thank you.
Thank you.
Jane, I got